It's a red week for Bitcoin and the largest drop that we've seen since the ETF pump and dump back in January over 2 months ago. There are also several other signals that could suggest that this is going to be an intermediate top, but we'll get to those later in the video. I don't want to scare you first up because this is a very emotional time in the market. As we hit new all-time highs, you can see the emotions get very over the top with any suggestion of a crash in the title or the possibility of a top. This time it cannot be over. We must keep going. If you find yourself in that emotional state, getting very swept up by words in a title, do yourself a favor. Don't look at the titles. Jump on the videos, hit the like button. That relaxes everything. Subscribe if you haven't already. It's your calming home of macro cycle analysis. We're not suggesting the world is imploding and it's the end of the day, but there are signals to suggest that we could see some turning points coming up in the very near term. Now, I'll get to those later in the video. You guys know the deal here. Bitcoin, crypto, stock markets, and real estate. We cover the lot. How do we do it? You'll find out here on the channel. Links in the top of the video description for our free crypto and economic report that is coming out tomorrow. So if you're not on that already, do get on that. Because if you do, you'll get updated when we have our free Ultimate Traders Accelerator coming out. So to get on board with that, click that link in the top of the video description and also use these links down below in the video description. That'll get you your free access that is coming out very soon. Let's kick the analysis off with the S&P 500. We've got interest rates to get through as it's a big week for interest rates around the globe. Well, mainly the US and Australia at this point. Now, with these grind up movements that we've been covering on the stock markets, we're not looking for a collapse. There's no recession. There's no second half 2024 collapse that takes out the previous lows. That's not what we're talking about. We have not suggested that for years when the masses have said there's going to be a recession through 2022 and 2023, and now they kick the can down the road to the first half of 2024 and then 2025. It's just the same thing that they keep going on about. We're not suggesting that whatsoever. All we're looking at here is the ranges starting to contract as we head up into higher and higher prices. Now, because we're in this grinding bull market, what we typically don't see are very large corrections as the market grinds. But what we have seen are single-digit corrections and some double-digit corrections. Nothing too extreme like your high teens or 20s, but something around that sort of 10 to 15 isn't uncommon, but far less common than the single digits. Now, even as we grind and the price ranges start to contract, as you can see here, we're on a monthly chart. For the pause, it might even just be a pause in terms of the price where you see the top come in, a bottom come in, the prices will remain relatively close to the previous month's low. Maybe it pauses for a month or two and then starts the turnaround and the climb again. Meanwhile, everyone's waiting for this market to fall further and further. But that's just another sign of the strength of the bull market. Sometimes it needs some time to recover, just to digest the move. You can see here in 2017 as well, after it exploded out of the election of 2016, you've got a couple of months here where it basically went sideways and then started the grind again. Most were hoping for another big pullback like you got from the election here, but it just was grinding and grinding and grinding. That is the type of thing that we're looking for later this year and also potentially into 2025. Now, we've got a long time to go for that, so I just want to keep that in the backs of our minds so that we're not getting too caught up in any sort of corrections that we might see along the way, because it's really important to note where we are in the cycle, and the cycle is still up. These sort of corrections will be met with a lot of extreme emotion, but they might not be met with the same sort of downside that many are hoping for, basically taking out very significant major lows to hopefully get into the market to then ride it back up. Those times are long gone and were probably missed. If you didn't get in last year, you would have missed any of these lows back here. This market's not coming back to these lows in my analysis, in my opinion. We're grinding higher, and that is going to suck a lot of people into the market, and it's the difficult time. Now, with that grinding effect, what we have seen on the interest rates are pauses. The market continued to pause on top of pause on top of pause and pause. And I've also looked at this on X as well, that you can see some of the updates here where the probabilities have crept higher and higher. Basically, you can see here from January, it was basically a cut every single month throughout 2024. That then led to this post here basically 2 days later where the December cut had got pushed up. So there was one less cut than what you saw 2 days earlier. Now, as we get closer to where we are today, a lot of these cuts have just been pushed to the right. You can see they've gone from getting cut to no cuts, which is just increasing the likelihood of pauses, which we take a look at where we are for the meeting coming up this week. It seems like it is going to be a pause for March. And that's basically a sign that the asset prices are still getting pretty damn hot and they're going to continue up from this point. So you always have three options: a pause, a hike, or a cut. Many are suggesting that a cut would be bearish for the market in the short term and then potentially bullish. Bearish because people are fearful that a cut means things aren't going too well and prices will have to come down. And then once they figure it out, I've suggested this in the post as well, that the buyers would start to step back in and push these markets up because, well, things have gotten cheaper from the cut. Now, if they hike it, again, in the short term, that might be a little bit bearish. Investors will potentially freak out at the hike because nothing had been anticipated for a hike. We'll wait and see what happens there. That could follow down the track and that might feed into the probabilities over the course of 2024. Not looking at that right now, but then a pause is basically the main thing that everyone is looking at. So it's not going to be any sort of big news event should it be a pause. So we've got a grinding bull market. There can be corrections along the way. Some of the reasons for those corrections could be interest rates. It could be a number of things. We'll just continue to follow up day to day. It's what we do here on the channel, which is why I suggest you subscribe to your macro cycle analysis, your home anyway. In terms of BTC, let's start from the short term and look at some of these signals that could suggest we'll see an intermediate top in the near term. Now, if you've been following the channel, you've seen these mega videos that have come up here. The Bitcoin failed 4-year cycle warning. I suggest you do watch that after this. I'll go through it in this video as well. And this particular one here I did a couple of days ago, looking at some of the major turning points that happens throughout the Bitcoin cycle. All right, so let's just kick it off with the shorter term update here. We've got the 4-hour chart looking at the bulls and the bears. Potentially, if this is going to be bullish again, the price of Bitcoin would have to get back above 69K, the previous old all-time high. It's also the current 50% level from the top to the bottom, which, as we should know, underneath that is weak and on top of it is strong. So if you can start to get some closes above there, well, then you're able to mount an attack again at the higher prices. If it's under that level, then all the work that's been done over the last several hours is potentially just a short-term dead cat bounce, which could lead to lower prices in the short term. Onto the daily chart, and we have a massive signal here that could suggest that the price may not be shooting up as hard or as fast in the short term. So we'll get onto that in just a minute. This is a huge professional tip from Michael's channel. So this is the back testing that he's done to find these particular rules in the market. And I suggest you pay very close attention to this particular rule. Now, looking at where we are, or where we've risen from coming out of the January low, we've not seen any points in the market where there have been 3 days down in a row. That just means the lower highs and lower lows, not red days. Forget the red days. That's for the masses to get caught up with. We're looking specifically at the price range of the bar. Now it shows lower highs and lower lows. That signal has now been met. Typically, not 100% of the time, but very high probabilities. We're looking at 3 days down suggests that this market isn't ready to go and pump to new fresh prices. Now, Michael did a fantastic video today. I'll leave a link to that in the video description for his channel so you can get up to date with it. But essentially from here, should we see the market skyrocket again, that would be a very, very weak signal, because this in itself is quite a bearish signal. You'd see it at the bottom too. If you saw 3 green days or 3 up days, high highs, high lows, it's a very strong signal to suggest that the market will go up from that point. That doesn't mean that we can't just break here and start to trend around at high prices and consolidate. The point here is if it was to skyrocket again, it's probably leaning towards more of a bearish move to the upside because there hasn't been enough time to consolidate after such a significant move. Markets need some time to consolidate, and it's going to be very healthy if we get those moves to the downside. And we'll look at some of those correction areas in just a moment. So that's the big move that we're looking at now. One day here, which was Friday, then Saturday, and then Sunday as well. They all had lower lows and lower highs from a top point And this top came from a very, very, very strong move to the upside. So I can't stress that enough. We have to keep watching what happens from here because we have not seen this signal happen for a very long time. I can't remember the last time we saw this particular signal. So very important. We'll continue to follow up with that. That's the daily look at the markets. Now, if that is to occur, if we are to see some sort of corrections here, let's just have a look at where we currently sit. So although that could be dire, at least for the short term, the longer term stuff, it doesn't seem so bad because, well, we're still in a macro uptrend. We still have plenty of volume coming through to the upside. So we're looking at weekly to monthly here now. The shorter term stuff, absolutely okay. We've seen it happen before and then the market's recovered from that point. We've discussed particular areas on the chart where if it was to break down, if the Bitcoin price was to break down from, that would be bearish, and particularly the $48,000 level. That's the previous complacency bounce. There's your monthly swing top here back in March of 22, so 2 years ago. And then where the ETF came in, it was also a short-term rejection there before we broke through. So anything under that 48K level, probably the show's over and come back in 3 years, all that sort of talk you can go nuts about. But for now, short-term stuff, absolutely okay. Short-term on the dailies here. So the correction so far from top to bottom has been 12% in the week. That's a pretty significant correction, at least for a week. Quite a wild ride for most. The emotions are getting really up there. We've seen it come out plenty of times already. But it's essentially looking at the moves to the downside. Anything average that to the price, to what Bitcoin's already done, 20% brings us out to $59,000, 22% brings us down to about $57,000. And should we start to stretch it out a little bit more to about 24%, well, that's our entire range from the ETF correction low to the current peak. That 24% drop would take us out to about $56,000. So that would still be above the weekly swing tops. It'd still be basically within the trading range of the previous all-time high to the previous all-time high. Essentially what I'm saying here is it's not a bad correction and it's basically average to what the market has done all the way up, and probably nothing to worry about. Even as far down as what we've talked about here around that 47, 48K level would be a 35% correction, and it would still be an okay correction, a healthy correction that would then just take a little bit longer to digest before it could start going again, which probably isn't a bad thing, especially for this price range that we've seen, this massive run up. And as we've said, corrections are going to be healthy for the market moving forward. So let's take a look at Bitcoin's market sentiment before we get back into those longer term moves. I've got some altcoins to get through as well. Just looking at the Google Trends and what we've seen at this point in time with the interest. We've got Bitcoin in blue, crypto in red. We've seen the interest die off. The top here was March 3 to 9, so that's that week. And then it died off the last week, and we're coming into this week now. March 17th to 23rd is also dropping off. So the highest week of search volume was this week here, March 4th. That was the time that we got into new all-time highs for the first time. And then as we pushed into new all-time highs again last week, that was a dropping on the sentiment. So people got less interested, retail got less interested, it's happened, and now it's dropped away. Now we're into this week here. We don't have enough data yet, it's only an hour or so old. You can see that the trend so far over the last couple of days at least has also been to the downside. Now this doesn't mean we're about to collapse. It's happened many times before. You look at the 5-year history here, even recently from the ETF hype back in January, it still dropped off. It accumulated, price was still higher at this point as it was accumulating again to push higher, and then it blew out. We got new fresh high prices for BTC. It happened very quickly, and then you also got the market sentiment breaking past the previous top of the ETF hype. So overall, to me, this is very, very bullish. You're seeing higher prices, even though the sentiment here, or the search volume for Bitcoin on Google, was still below the ETF hype, but you had higher prices, and then it was able to break through. That's the important point there. So we're definitely seeing some pretty good moves to the upside here for BTC. Could it be a left translated cycle? I don't think so at this stage. We still don't have enough data overall, but from what I'm seeing with the cycle, I still don't think this is going to be a left translated cycle, or at least in this sort of first half of 2024. Now, if it got really close and happened and we got a peak in the market in October of 2024, well, then technically it would still be a left translated cycle. But I'm sort of looking at somewhere Q4 of 2024 to Q1 of 2025 for some sort of peak in the market, which has been pulled back from sometime later in 2025 as well. Sort of looking originally around that second half of 2025, which would coincide with something like previous cycles going for that longer move to the upside. We'll have to wait and see. And the main thing here is I can definitely be wrong. And it's most important just to keep following the chart. But from what I can tell at the moment, it doesn't seem like we're going into this left translated cycle and everything's about to die off and it's over. Of course, that's no reason to not follow the chart. As I said, this is going to be one of my key areas there. $48,000. If this just dies out for months until after summer, Northern Hemisphere summer, and you see the price under this level, that would be a key warning sign. But if it is able to hold out, continue to consolidate, interest is lost over this summer period that's happened in the past, as we'll get to in a moment, but then starts to creep back in through autumn for our spring and then into winter again, that might be a good sign that you're going to see some higher prices and push into the end of the year, some higher prices again, and then into potentially 2025. But let's keep moving on to some of the more macro stuff here. And something I covered on the previous video in a lot of detail. So if you do want to have a look at that, go back to the channel here and look at the failed 4-year cycle video. This one here is looking at the turns for Bitcoin, which months at which stage of the cycle. So what we have seen in the past typically is some sort of intermediate turn, and this is on a monthly chart. This takes a long time to play out. So day to day, maybe you'll see some price go a little bit higher past 74,000. Maybe it goes a little bit lower to the 50s. That's not the point. The point is we're looking at what's happened in the past and when do these turns come in. So going through the data of Bitcoin's entire history here, June, April, June, March. You also had a bit of a turn here in April, June again, April, which was the previous cycle, 2021. And then we had 2023, April top here and a June, July top here. And then we've pushed higher. So they're sort of like the mid-cycle turns before the old all-time high. You saw it again, it happened twice in the 2021 cycle, happened twice in the 2017 cycle, it happened twice in the 2013 cycle. Well, maybe we see it again at the moment around this March-April period and see how the market digests the move after that point. I want to see what happens after the halving and whether that's all been the hype up there along with the ETFs, and then the market sort of tapers off until it can digest it to then go again. Now, the end of the cycle moves have basically all been around the same time. November 2021, that was the cycle peak. I know many like to try and suggest April was the peak, but it wasn't. That is the physical peak right there. You can see the price is higher. That's the top. November, you've got December of 2017, and you've got November, which was the day before December 1st here in 2013 as well. Of course, things can shift a little here. It's a 4-year cycle. We're looking at timeframes in a longer macro sense. It doesn't have to be exactly at that point. Maybe it comes in October. Let's wait and see. But the main thing is that we've seen quite a significant move up. We've seen similar things to what's happened last time. You've seen some pushes or some tops here, intermediate tops around that April and June period. We've also seen it happen in March 2017. Maybe we'll see something similar here through that March-April period before we start to correct. In addition to the turning points, we're also looking at monthly swings. Now, not to go into too much detail again, because a lot of the detail was in that video, the chances of Bitcoin, the Bitcoin price moving 7 straight months up is very unlikely. It's a 7% chance. So 7 months or more, higher highs, higher lows without a swing in the chart has only happened 7% of the time. I think it was maybe there you go, 4 times in the entire history. And anything more than 8 times, 8 months or more, has happened, I think it was twice when we looked at the overall price data here. So it's very, very unlikely, not impossible, but very unlikely. So if we were to see that, that could be a pretty reasonable turning point for BTC to then have a bit of a time off, a bit of a consolidation at that from those prices at the highs, and then consolidate to then move higher again. So that's kind of where I'm sitting here with the macro cycle based on the data from the charts, looking at the swings, looking at the monthly turning points, looking at the time frames for those swings. A lot of things are suggesting that that's potentially where we are at. Now, there are going to be some cryptos which are heading towards their tipping point throughout this. And again, another big one that we've been following here, which again, suggest just follow the channel, way easier. Tipping points for cryptocurrencies overall. Once we break through that monthly swing top, the complacency bounce, you can see it happen for BTC. That's the same point there. That was a monthly swing top, basically where everyone was complacent that the bull run was still on, but it wasn't. Definitely a bear market and collapsed from there. Bitcoin got past that. We skyrocketed from there. ETH is getting very close to that. There's the monthly there. We've hit it and we're sitting above it. So we've got to wait that out. And Solana has broken past that monthly tipping point. So that's at $130, $140 on the monthly and skyrocketed from that point. Now I've got a second tipping point here. That was the weekly lower swing tops out of the top. But that monthly one is really where that gas gets thrown onto the fire here. And you can see the prices just have skyrocketed from there. So that's just Solana on its own. Now within Solana, if you've missed out on Solana, you've got plenty of other altcoins that are within the ecosystems. We've been following things like Dupe, Pyth. I know many others have been trading things like Bonk. So if you sort of feel like you're missing out, don't worry, get rid of those feelings. It's only going to destroy you in these markets. There are plenty of opportunities out there. Don't feel like you've missed out on the only one. You've got plenty of other cryptocurrencies within that ecosystem. So that's just looking at Solana on the monthly and on these tipping points. And it actually just really well happened in the last couple of days, breaking past that monthly top, and the tipping point has been met for Solana. Now, looking at the total cryptocurrency market cap minus Bitcoin, ETH, and stablecoins, it's getting very close to that point again. So could now be the time that it just needs to cool off for a minute, reconsolidate, and then start to work its way higher to break past that top there, roughly $670 billion. Obviously, we'll have to wait and see. In terms of corrections, or healthy corrections at least, you can see from the top here, moves to the downside of about 23 to 36%. What the market has done already. So if you were to see some of that, this would probably have to come from the top 10 to top 20 altcoins to get this sort of correction. If you're seeing Solana go up at the moment, and this is excluding ETH, so it would be the top altcoins, Solana's in the top 10, XRP, Cardano, Binance, you would need to see a lot of these majors fall to get to this 36% drop. So maybe a 20% drop is possibly more likely. It could even be less because we've done the 23% drop. Maybe it's going to pause out here, consolidate to then break past, hit the tipping point, and then altcoins are also able to explode once we get past that point there. So that is going to be a big one to keep on your charts, around that $670 billion of your total cryptocurrency market cap, minus Bitcoin, minus ETH, and minus the stablecoin. So that's your TIA exclusive chart there. You can find it with a link in the top of the video description, your free 7-day trial. Check that one out there if you want to get that particular indicator on your chart. So we brushed over ETH, but just in a little more detail here in terms of the corrections, it's done about 16.5% from the current peak there at 4,100 US, getting very close to its weekly swing top from the previous bear market. So that's the decline there. It's hit its monthly, and ideally we'd like to see it explode from this point. I think it's going to come down to timing now if everything else can start to explode. But it also got past its 50% level, which was fantastic. It was able to explode from that point. So this is just going to come down to timing now for ETH. In terms of the corrections, it's done a 20% after the ETF hype of BTC. That's your January correction. And then also a 24% correction from April into June. If you want to take the whole move to the downside, about a 28, 29%. So from where ETH currently sits, your 24% would be 3,100 US. A 29% take you about 2,900 US. And if you wanted to go to 30 to take it all the way, about 2,800. So I don't think we're going to see a similar sort of correction just yet for ETH. Happy to be wrong on that. Cheaper prices, of course, but I'll just keep in mind some of the moves that ETH has already done. You're roughly 20% here, and that first move out of the April top down to the June low was about 24%. So something a little bit more realistic might be around 20 to 24% should you see ETH also begin to break down on the lower term timeframes, as it has done on the daily here. You've got 1, 2, 3, 4 days down now from those particular peaks with lower highs and lower lows. A reminder for our free Ultimate Traders Accelerator coming out. To get on board with that, link in the top of the video description will let you know when that is released, but you need to be using Bybit and BitGet. Links in the video description. Some sign up bonuses there, $50, $100, $500. Check out the links to find out what you can get. And of course, for the Aussies, SwiftX is there as well. Go and check out Michael's channel. Huge videos that he's put up lately that have got tons of very important macro data as well. I'll see you back here at the next video. Don't get trapped or fooled by this particular correction that's going on. I think it's just an intermediate correction. It may last longer than what we have seen. These last corrections have only been about 12 days. So don't get too trapped in that mindset that we have to collapse and it's left translated, cycles over, see you in 3 years. I think there's plenty more opportunity to come up. This might be a good time to be reaccumulating some of those altcoins. I'll see you back here again at tomorrow's video. Let me know, pinned comment. Do you want to see more than 4 to 5 videos per week? Do you want to see a video every single day now that we're into this retail mania bull market? Pinned comment down below. I'll leave it there, yes or no. See you guys at the next one. Till then, take care and peace out.